Silicon Valley Bank is a California-based commercial bank founded in 1983. The bank, which provides services to venture capital and private equity firms, as well as private banking services to high-net-worth individuals, has a significant presence in the tech investment ecosystem. In the biggest bank failure since the 2008 global financial crisis, US regulators have shut down the Silicon Valley Bank and taken control of its deposits. This news has sent shockwaves across the globe, especially in the startup industry. Reports suggest that several Indian startups are at risk due to the collapse of the SVB, which has exposure to over 20 Indian startups. In addition, the Silicon Valley Bank invested in Indian firms such as Bluestone and others. They were also one of the first investors in Paytm, though Paytm clarified that SVB had sold their stake and is no longer a shareholder. The problems of the Silicon Valley Bank were sparked by customers withdrawing their funds due to global recession fears. Several depositors demanded their funds back, which led the bank to sell its securities positions to repay these deposits. However, the prices of these securities had fallen due to a consistent rise in interest rates by the United States Fed Reserve. To pay depositors' requests, the Silicon Valley Bank was forced to sell off some of its investments at a time when their value had declined, leading to a loss of nearly $2 billion. The impact of the crisis has been significant, with a number of large investors, such as Quality Management Y Combinator and Peter Thiel's Founders Fund, advising portfolio startups to withdraw their deposits from Silicon Valley Bank. However, the bank has urged its customers not to panic and withdraw money from the bank. The fallout of this event is that deposits of several Indian startups are stuck in the Silicon Valley Bank. The CEO of Y Combinator has stated that thousands of startups globally are at risk due to this bank failure. He also added that this is an extinction-level event for several startups globally, which will face a 10-year setback along with the innovation and tech industry. There are also fears of a cash crunch in several Indian startups because they reportedly received investments from this bank and deposited their money there. With businesses representing nearly half of all US venture capital-backed startups and 44% of US venture-backed technology and healthcare firms that went public last year, Silicon Valley Bank had $212 billion in assets as of December 31, 2022. Its clients include well-known names like Shopify and Pinterest. During the funding boom of 2021, the bank amassed large deposits of around $189 billion, which later peaked at $198 billion. It then invested heavily in bonds that were being issued in a low-interest rate scenario, with its balance sheets showing $91.3 billion of securities by the end of 2020. However, in 2022, the US Federal Reserve started raising interest rates, driving down the value of the bank's bond holdings issued at lower rates. This led to a funding winter, as venture capital firms cut fewer and smaller checks to startups, causing funding to deplete. Deposits made by startups and institutions such as Silicon Valley Bank also started declining, forcing the bank to sell securities at a loss. In March 2022, the bank announced it had sold $21 billion worth of bond assets, resulting in a loss of $1.8 billion. It also said it was raising $2.25 billion by selling shares. In conclusion, the collapse of the Silicon Valley Bank has sent ripples across the global startup industry. The exposure of over 20 Indian startups to this bank and their inability to retrieve their deposits has put them in a precarious position. The fallout of this bank failure could be catastrophic for several startups and the tech industry in the coming years. It remains to be seen how this event will unfold, but it is clear that the repercussions of this bank failure will be felt for a long time to come. If you enjoyed this video, please consider subscribing to our channel for more informative content. We appreciate your support and feedback. Thank you for taking the time to watch, and we look forward to sharing more valuable information with you in the future.